Assist to sell way smarter.
Hello everybody and welcome to this special live Reno-Sparks real estate market update, this time for November 2021, almost at the end of the year. And where is the real estate market headed? It's been a crazy year to say the least. Are prices still on the rise? Is inventory still extremely low? What about interest rates? Well, we're going to answer all those questions and a whole lot more here in just a few moments. But before I get to that, I do want to mention this is an overall sort of a 30,000 foot holistic view of the marketplace. It's not intended to be specific valuations on specific neighborhoods or properties. If you're interested in getting a more specific valuation on your home, or maybe a home you're thinking about buying, you can visit our website for renohomes.com. You can go right here to the Find Out Now button. Just click on that, put in your address, and we'll send you an automated report. We'll dig in a little deeper and give you all the information you need to make the best choice for your situation. Now, this is just for the Reno-Sparks area. We don't cover the outlying areas like Carson, Minden, Gardnerville, Fernley, Fallon, Dayton, etc. If you are out in those outlying areas, don't hesitate to reach out to us. We can get you stats for those markets as well. So let's get right in to the numbers. And one of the first things we always look at are interest rates, because those have the largest impact on where prices are headed. And as you can see, prices have gone up over the last 6 or 8 years significantly, and interest rates have come down. So they're in many cases directly correlated. And as you can see here, with the exception of late 2018, they've pretty much been on a downward trajectory. They actually were the highest they'd been in over a decade in 2018. And they were over 5% for a 30-year fix, which a lot of people are saying, are you kidding me? Over 5%. Now that's still historically low, but significantly higher than we're seeing today, right around 3%. And you look over to here, we're sitting just over 3% as of the recording of this video. Now, where are interest rates headed? Well, nobody really knows for sure, but I can tell you the reason interest rates have been on pretty much a steady decline is because the Federal Reserve has been stimulating the interest rate market, if you will, by buying bonds, by buying mortgage-backed securities, which in effect pushes mortgage rates down. And as you push mortgage rates down, that tends to spur on more activity. Buyers can afford a lot more. People that may have been considering buying but couldn't quite afford it, now with lower interest rates they can. The downside to those lower interest rates is it does tend to push real estate prices higher. Now, the Federal Reserve has already come out and mentioned and said that they are going to start tapering starting next year. What that means is they're just going to be providing less stimulus to the market, so you're going to start to see interest rates climb a bit. Now, I will say this, I don't expect them to go much above 3.5–4% at the highest, because the higher interest rates go, it's going to really start to put downward pressure on prices. People can afford less home, and prices are already elevated. So the Federal Reserve is not going to want to push interest rates too high too fast, because it could really slow down the overall economy and certainly the housing market. So I expect interest rates to remain relatively low and stable, which I think will create an environment for a pretty strong real estate market in 2022. Now let's look at the number that gets the most headlines around the country and certainly locally, and that is the median home price. Right now we're sitting at $540,000. That's for all of Reno-Sparks. That's up 1.9% from last month, where it was $530,000, and up almost 19% from last year, where it was $455,000. So we've seen a significant increase in price. However, we've seen over the last couple of months, really since July, August, it's kind of I won't say flatline, but it's stabilized. You're not seeing those massive gains like you saw back earlier in the year. So I do expect that to continue. I think we're starting to see prices level off, and I expect them as interest rates rise. Like I mentioned before, I don't expect price appreciation to be nearly as great as it's been over the last couple of years. Now let's look at the total number of sales that closed in October. It was 565. That's down 4.7% from last month, where it's 593, or I should say September. It down 10.5% from October last year, where it was 631. So a couple of notes about this. Number one, it's pretty common for sales to drop slightly in October and even into November, December. After it's very seasonal, the real estate market, and you can see that from the charts here. Normally sales and listings pick up first part of the year. They tend to peak out somewhere around April, May, June, before you start to see a little bit of a lull in the summertime, and then you usually get a little bit of a pop in activity into the fall before you see it fall off significantly. So I would expect this number of sales to drop significantly. The other thing I will mention is it's difficult to compare August, September, October, November of 2021 to 2020 just because of the pandemic, right? A lot of the sales that would have taken place in March, April, May of 2020, which was during the pandemic, did not take place. Things pretty much shut down. People were not putting their homes on the market. A lot of those sales got pushed forward. So it's a little more difficult to compare year over year just because it was such a crazy year in 2020. Now let's look at closed sales by price range. You can see the majority of sales are taking place in this 4 to 600 price range, and then it sort of tails off when you get into the upper price ranges. Now let's look at the active homes. So if you're looking at buying a home, or if maybe you're putting your home on the market, what's the competition like? How many active homes are currently on the market? Right now we're sitting at 531 homes. Again, down 16% from September, but that's pretty common for this time of year, so it's not too alarming. It is up 9% from 2020, where it was only 487. Now let's look at, again, active by price range. Now, if you're looking at buying or selling a home, it really comes down to price range. That's going to dictate what the market conditions are like. And you can see from this chart, we got a lot of homes coming on the market and active homes available if you want to purchase. Really 500 and above, you start to see more and more homes. If you're under that 500 mark, there's less and less homes available. Let's look at new listings. So the last chart was the active listings, so currently on the market today. These are listings that came on the market in October, which was 604, so down 12.8% from September. Again, very common. Up slightly from 2020, where it was 599. And then new listings taken or new listings on the market by price range. Again, if you look 4 to 5, 5 to 6, up to maybe 750, that's where the majority of homes are coming on the market. Now the last stat we'll look at, and we'll wrap this thing up, is supply. So a lot of people call this absorption rate. There's a number of different ways or things people call this, and really this is a good indicator of I guess I want to say the health of the market, but how rapidly the market is moving and what direction it's headed. This is kind of a broad overview, and the way it works is this: the absorption rate is how long it will, in terms of months, how long it will take to sell through whatever inventory or houses that are currently on the market. So for example, let's just say there are 500 sales a month on average, and you have 1,000 homes on the market. That would give you a 2-month absorption rate, right? If you have 1,500, it'd be 3, and so on. Now a normal stable market is right around 3 to 4 months, is considered sort of a neutral market, stable market. If you get much below that, you turn into what's called a seller's market. You may have heard this before. We are firmly in a seller's market, which just means that sellers have a bit more pricing power. There's not very many homes on the market, and there's a lot of buyer demand, and so sellers can ask more. They may get multiple offers, and it may drive prices up. And the opposite is true in a buyer's market. If you start to get above that 3.5, 4, you get to 5, 6, 7 months, now you're entering a buyer's market, which means buyers have pricing control. There's a ton of homes on the market and very few buyers out there buying for one reason or another, and that's going to put downward pressure on prices. So right now we're starting to see some relief. You can look back many years ago, and the average has been around 3. It drops down to 1.5, 2. We've seen it go up above 3 a bit. And remember that chart I showed you on interest rates when we first started in 2018? Look what happened right here. Look where the market happened, and that corresponds. Look in 2018. Look what happened. So you can see how the interest rates really do have an effect on the overall market, and obviously prices and supplies and so on. Now we're seeing some relief in that we're up to almost a month, which is still incredibly low and still puts us in that seller's market range. However, we're starting to see that rise, and I do expect this number to continue. Now let's look at the absorption rate by months by price range, and as you can see, and I mentioned before, price range is going to have a huge effect on whether you're going to be able to sell or not, or if you're going to get a higher price, or if you're going to get a ton of showing. So for example, seller calls up and says, hey, I want to sell my home. What price range are you in? Now if you're 600 and above, certainly you can sell. The market is still really good, but it is more competitive in that price range. So you may not get tons of showings. It may take a month, 2, 3, 4 months to sell. You may not get multiple offers, and you may get an offer that's slightly below asking. That's fairly common, believe it or not. Now if you're under that 600, if you're in that 400 or 500 range, you're probably going to get a lot more activity. You may get multiple offers because there's just not a lot of inventory available. The same is true if you're buying. So you're going to have to be more aggressive and competitive if you're in that. If you're trying to buy a home that's say 354 up to 556, there's a lot of buyers. There's very little inventory. However, if you're buying 550, 600 and above, you might be able to be a little more selective with your offers. And so really it just comes down to price range. Now, if you need more information about your home sale, you'd like to get the details, days on market, all kinds of fun stuff like that, don't hesitate to reach out. That's what we're here for. If you don't know about Assist to Sell, we are a licensed full service real estate company. Been in Reno since 1987. We've literally sold thousands of homes local owners, millions upon millions in commissions compared to paying 6%. So what we do is we sell your home for only $39.95. Your home over $400,000 is only 1%. So significant savings compared to what you might expect to pay at 4.5%, 5%, 6% from other realtors in the marketplace. Our contact information is right here on the screen. 775-688-6060 is our phone number. info@4renohomes.com is our email address. Visit our website. Give us a call. We're happy to help however we can, regardless of what you choose to do going forward, buying or selling or just going to stay put. We wish you nothing but the best. Happy Veterans Day, and we'll see you next month. Bye-bye, everyone.
Assist to Sell, way smarter.